Okay guys, hope you're well. It's a little thing for Roadhouse in the squad, little salute to you kid. I picked a message up from him regards the boot camp, and you are definitely on the right track, kid. So let me just explain how I would break it down, and this might help. And for those of you who haven't a clue what I'm talking about, the boot camp is part of a prop firm from the 5%ers, and it's a company that I've used for a while. I've never had an issue getting paid, and if you've got limited funds, this is a good way to go. So let me flick over and get into this. So what he's looking at is the boot camp, and as you can see, it's peanuts to get in. It's 3 stages, and you've got to hit certain milestones, pass each stage, and then you get funded, and then you get paid on your profits. But it's all here to have a chat. But I'm really doing this for Roadhouse. So first of all, let's look at the stages that are involved. So 100k account, it's 25 balance, 50 and 75. And you've got to achieve 6% on each stage in order to get past. And you have a drawdown of 5%. Now, one of the good things that the fivers have done is they've removed the daily pause till the point of passing. What that means is, it used to be if it was 3% limit, it would just pause and close out the account. That's now been removed, and it only applies once you're funded. So it's a little bit of a step up, okay? And one of the beauties of this, it's unlimited. So if it takes you 3 years to pass, it doesn't really matter. Whereas a lot of prop funds, when they first kicked around, you had to do it in 30 days. I mean, it's just bloody madness. And one of the reasons why I like the fivers, and I've stuck with them for the last few years, is because when I first started with them, they had loads of time to pass, and now it's unlimited. Anyway, let's get into this. So they're the 2 numbers to remember, 5% and 6% and 25. Let me show you how I would put this into a journal. Now I'm just going to push this over to one side, and I'm going to pull up a journal that I would use. Okay, so for this one, I would use what's called my prop journal. And the reason why I'm pulling this up is it works everything out for me. So if I come onto my summary, your starting balance would be 25k, and it told you the drawdown is 5%. So you just drop them 2 figures into there and you're sorted. Now, obviously, if we start, it doesn't matter where it is, it's all pre-populated. It comes through. Now, what it's telling you straight away is the baseline that this can't go beyond is 2350 or 23,750. So you can increase your drawdown with profit, but it can't go below that level. If it does, it comes out. And then it's telling you what you've got to play with here. Okay? Nice and simple. All right. So from there, you can work out your position size. So it's telling you, you can look at, shouldn't really call it min and max. It should really just be max. Or medium and max. Med and max. Just change that. Kind of explain why I've done that. It's because this is roughly what you want to be working to, but if you see something that is spectacular, you can maybe push it out to that, but you never want to exceed that, because you'll stress the account way too much. Okay. Now over here, you can control your bid size. So you might want to start your bids at 50p and then just build it up. It'll tell you what your next position size will be, and then you've got these 2 to work on. That can never exceed. All right. So that's just one of the first things I will be looking at, position size and how much I can put into the market at any one time. Now, the next part of this, as we were discussing, was the targets. Now, the targets, if you remember, so you've got a max loss of 5%, you need to achieve 6%. Okay. So if I drop it up here, now, my head might be in the way, so I'll just push it over a little bit so you can kind of see it. Controls your targets. So put in 6%. Now what it's telling you is what you need to achieve. You need to achieve 1,500 quid. Okay. Now that is 3,000 pips at a size of 50p. Now, depending on how you do it, if you're pushing your boat out, so if you're looking to increase this, say you go full whack of 125, which is up there, it'll start slowing this down. There you go. It's adjusted to 1,200 pips. So you've got a guide as to how many pips you need. But what I'd be more interested in is the time that I have to do it. So I'll be looking to put my goal in here. So that will be 1,500, which is here. And then give yourself a day target based on the length of time that you want to pass it. Now, I saw in your notes, Roadhouse, that you wanted to do it in 2 months. So if you put 2 months there, well, it's telling you it's 34.62 per day. Okay. Now you can start working things out. Well, if I've only got to do 34 quid, round that off to about 40, aim for 40 quid a day, and what happens is it'll start knocking days off your 2 months, but also allows a buffer if you're wrong. So just by quickly flicking through this, you can set some rules up. So it's 34 a day. So you can just put an aim in here. Aim £40 per day. Okay. Now you can start working things out. Well, how do I get this? Well, let's say I only want to do 2 trades. So 2 trades per day. What am I going to trade? Am I going to trade cable, gold, etc., etc.? But now what you've done is you've taken your aim 40 quid a day. Each trade needs to be 20 quid each. Well, by definition, that's, if you're on £1 a point, that's 20 pips per trade. More than doable. You're starting to focus in on what you're doing just by having a few figures in front of you. Now, if you want to push the boat out and you're going to go out to the max and you're at 250, well, that means you've only got to do 600 pips in order to do your 1,500 quid. This isn't difficult. Now, you can do it through splitting things up. You can go multiple positions of 50p, so that's 5 splits. And that means it'll help you control and let trades run. So really this is for you, Roadhouse, just to give you a brief idea of how to break things down a little bit. But just always have in front of you what your baseline is, what it can't go below, and then what your drawdown monetary amount is you play with. Now, as you start putting money into this, what you'll see is, you've increased your balance by 50. It meant that drawdown has increased. The baseline stays the same because that's the level that it can't go below. But that shows you that your drawdown, where you base your position size on, is increased, which naturally started increasing your position sizes. So you can start working out viable sort of targets. And the more you do, the easier it becomes. So if you start getting decent amounts into here, 40 quid, it means you can start pushing your position size up or leave it at the same and allow this as a buffer. So really that was just a very quick video to show you how I break this down. Now, the guys in the squad, including Roadhouse, know exactly how I'm working this. But the idea here is just to make you think outside the box. Don't think because you've got a 25,000 balance, you can go in with 2.5 lots, because it'll wipe the drawdown out in a heartbeat. But if you go in with sensible expectation, in other words, go in like £1 a point, £2 a point, and set your stall out for 2 months, 3 months, you'll find this is quite simple. So I hope that helps. And as always, guys, do what you love and the money will follow. See you all in the next one.